IT, let's also bring on board Shashi Bhusan, IT analyst at Prabhudas, Lilladher. He joins in to talk about his views on the IT space. Shashi, hi, afternoon. Will IT continue to be the leading sectoral gainer yet again this year when the street is sort of, hoping for a cyclical and rate-sensitive recovery?
The demand environment for IT looks to be good. If you look at the macroeconomic data which is coming from either US or Europe, we are seeing only positive cues coming from those two parts of the world, which contributes around 90% of revenue for Indian IT companies. So there is no reason to believe that Indian IT companies are not going to get a rebound impact because of improving macro. So our sense is that we continue to see improving demand environment, and that will have a positive impact on the sectors as well.
Shashi, while most of the IT companies have said that FY15 growth will be better than last fiscal, it's only TCS and HCL Tech along with Tech Mahindra who have reiterated that beating the NASSCOM guidance. Do you think that there's more potential for some of these names?
Well, definitely, TCS looks to be on the track to beat their last year performance, which is around 15.5% year-on-year growth on US dollar term. So looks Tech Mahindra. These two are our preferred bet in the sector. We have we look at other companies. If you look at Infosys, our sense is going to have a little softer. That's because of the management changes and some of the project ramp down they have seen. Overall, I would say that among top 5 companies, at least 3 will have better FY15 than FY14.
So, Shashi, walk us through what are your likes and dislikes within the IT sector and any ratings revisions that you expect to come in post this time around's earnings?
Well, there could be some upgrades because the currency has been supportive in this quarter. If we exit at somewhere around 60.9 or maybe 61, there will be some earning upgrades for the sector as a whole because you will have asset translation gain. And most of the companies are sitting little light on forex, so the losses are not going to be that huge. In terms of likeness, among the tier 1, we continue to like Infosys Wipro. That is going to see a cyclical recovery once the demand environment looks more positive. Our sense that the management has been working aggressively on deal wins, and that's what going to work in favor of them. And so is Tech Mahindra and TCS. We have a little concerned about HCL Tech for their stretched margin lever, which I think is going to result in decelerated bottom line performance going forward despite healthy growth at the top line. Among the mid-cap names, we continue to like Persistent and Mindtree, which is our favorite for the last 2 years. And among the new names, we upgraded KPIT last quarter to buy, and we sense that
Sure.
Given the strong outlook for the automotive, obviously it will have see some positive growth as well.
Okay, Shashi, we'll leave it at that. Thanks so much for joining in and giving us your views on the IT sector and some of those growth performers. Quick break. On the other side, we'll get